Hey everybody, what's going on? John here. I got videos on investing, on credit. You're going to see some videos in here on active living, on short and medium term furnished and vacation rental content. Why? Because we are in the thick of busy season. That's right. Here we are in June. Time of this recording, it is June 28th, 2021. I've got two places that I own here in Southern California, and then one that I actually, where I just kind of help manage, and it's right in the thick of busy season right here in June. But what do we have today? We got a video on investing. I've actually completed a basket of stocks, what I call turbo growth stocks. I mean, you are going to see Apple and Microsoft in there because you can't really have a growth, basket of stocks without having something like, Apple and Google and Facebook and Amazon in there. But so they are in there, but it's really what I've kind of honed in on as what I like to call turbo growth, right? And what do we have today? I wanted to show you a couple stocks that that are new stocks that I've actually have that I really like. They're certainly in this basket of 50 turbo growth stocks. But I just started following, and I haven't taken a position. What I'm going to do is when I take a position in these companies, I'm going to do a video about which ones I took a position in and exactly what that, from a percentage perspective, what that percentage was and why, right? So let's get right into it. So basically, and what I've done here is I'm gonna go ahead. I'm gonna zoom out here into Yahoo Finance. But the ones that I chose, and I'm gonna give you these in order of preference in terms of what I like. So let's go ahead and do that real quick. So right here. All right. So number one, the number one that I like the most that I've added. And we have a 5 here today. 1, 2, 5 today. Number one is Asana. So I'm not going to describe each of these, right now. I'm going to describe them when I go into them. Right. Number two is Hubspot. Okay. Number three is Enphase. Number four is CCIV, which is just Churchill Capital Company. Which is really kind of the shell of Lucid Murders. And then the last one is Neo. So those are the 5 that I'm going to go into. So let's take a look, all right? So basically what we have here is we have Asana. In case you're not familiar with Asana, what Asana is, they're a publicly traded company. They've been around for, I don't really think that long. I'd have to kind of, I guess they probably October 2020, so not even public for a year. But they're basically project management, project management in the cloud. Whether you're an individual or you're a company, you can go use Asana for free and start doing project management. I personally love project management, places to use. And the two that I found that were for free back when I was actually regularly using them were number one, FreeCamp. And then the other one was Asana, and I actually did manage a few projects with Asana, and then also did manage some other projects with FreeCamp. But anyway, I really like Asana for a lot of reasons. Number one, I've got a lot of familiarity with it. I've been able to, highly successfully manage a few projects with the aid of a project management solution in the cloud, very similar to Asana. So I see the value in it. And I really like their numbers, great growth company. Let's say turbo growth company, right? So the next we have in the mix is HubSpot. HubSpot is kind of, like they're a web-based, they provide a lot of solutions for internet marketing, is what they are. I'd say anybody who's been involved with anything related to internet marketing they've all heard of HubSpot, right? The next one is Enphase, and Enphase they kind of make like semiconductors. They make technology for the solar industry. I'm starting to do a lot more content. I'm starting to cover more investments in solar. I've got a lot of contextual experience myself with solar because one of my investment properties is in the Inland Empire in Southern California, and electric bills were like out of control for a long time. I actually have solar in effect as of pretty much 2017, and it's been life-changing, certainly getting solar there. And I also did a video recently on YouTube, which is the top kind of solar and clean energy ETFs to consider currently. And that was like literally, I think, just last week. So I'll link to that as well. And then the other one is Churchill Capital Corp, which is really just the shell for Lucid Motors. If you're not familiar, Lucid Motors is just creating really simply beautiful cars, and trying to be, going to attempt to be a rival to Tesla. And then the last one is NIO, and NIO makes electric cars. They are in China. They are a electric vehicle manufacturer in China. They're getting pretty high with a market cap of over 80 billion now. So getting to be a little bit outside of my my preference, but at the same time, they are still growing like a banshee, and they were up 10% today, here Monday, June 28th, 2021. Alrighty, so let's go ahead and take a look. So what we have here is, the next thing I'm going to do is the handy dandy spreadsheet. So I got kind of stacked up their numbers here for you, which is, let's go back to the bottom. And again, in case you aren't familiar, kind of the zone of, kind of the financial zone, the numbers zone, let's just say, of the companies that I like are, I really like to find a group, if I can, when they're doing revenue of $1 billion or less, right? It's okay if they, if they have recently, or they're about to, or they just recently hit $1 billion. Actually, I'm starting to get a little bit more comfortable if they're like way under $1 billion, right? For example, Fiverr, I did take a position in Fiverr, and they're only 100 million. It's a little shocking how high their market cap is, but they're still only doing 100 million in revenue, which is just crazy. But I really like that $1 billion figure, at least to try to spot them before. Basically, what happens is in the U.S., you have kind of a mid-cap figure of 2 billion to 10 billion. So if you can snag these groups, when they're at mid-cap, that's great. I think it's going to be pretty hard to find a valuable company that's really going to be a massive turbo growth company that's going to be under 2 billion. If you can do it, hats off to you. I just think it's going to be pretty tricky. So if I can do it, if I can, snag them in that $2 to $10 billion range, which is a mid-cap, that's what I try to do. Another thing, I really like gross profits. It's a big one for me. I really like to spot gross profits. You're not going to find many companies that are going to have as high gross profits as like Facebook, where they're at like, the 80% or 85% or higher. But if I like the company, if I like the product, and it's within my, my turbo growth, comfort zone, and also related to internet and technology, I'm really getting excited when I can see those high gross profits. And, one of the last ones I look at is year-over-year revenue growth, right? Year-over-year revenue growth is not, I'm not necessarily looking for an exact figure. I like to stack them up and look at them in a peer group. Obviously, the higher, the better. One of the highest year-over-year revenue growth rates that I've seen in terms of the basket of 50 that I look at is Etsy. They came in at 2020 year-end, calendar year 2020, at a 100% year-over-year revenue growth rate. And just so you know, I'm always looking at full-year figures. I'm not looking at quarterly figures. I mean, I look at them on a quarterly basis, but I'm really looking at, what they're doing, their revenue for a year, their gross profits for a year. I'm really looking at actual full 1 year or fiscal year numbers, right? And then the last one is I like to take the growth, the yearly growth profits, and then go ahead and divide it into their market cap, and then come up with a figure so that I can kind of stack it up against each other and see how they're all trading in terms of from a valuation perspective against their peers. And again, looking at gross profits, not operating profits and not net income, but gross profits relative to their actual total market cap. So let's go ahead and take a look at the handy dandy spreadsheet. We're going to take a look at Asana. This is probably of the new ones that I'm following. Again, I got my basket of turbo growth stocks up to 50, and I'm doing kind of a new program here where I'm going to be actually doing like a challenge where kind of showing people how to do some of this turbo growth investing, and I wanted to get a basket of 50 stocks, so I actually finally have that. But you take a look at Asana. We're looking at most recently reported full 12 months of revenue at 227. So nice and small. So pretty much the smallest, second smallest on the list right after Fiverr, right? Really super high gross profits. Love that, everybody. At 198, so about a 200 million, 87% gross profits, possibly the highest on the list. The only one that's higher looks like it's actually HubSpot. I could search the list, but I'm not going to do that right now. And then we got a year-over-year revenue growth rate, 60%. Super, very attractive. Don't always see that 60% year-over-year revenue growth rate. Obviously, for them to get bigger and get into that billion-dollar revenue figure range, they're going to have to grow pretty fast, right? And then we've got the gross profits into the market cap of a multiple of 50, which is a little bit high. To give you an example, a stock I really like, is one of my best picks, is Roku. And even Roku now at, basically Roku, let's just say, it's around a $50 billion figure. Let me just triple check to make sure, because the stocks were up today big time, but it's about 58 right now. So it's about a $58 billion market cap. And they've got a similar kind of multiple where their gross profits compared to their market cap is trading there. So that is Asana. So my second favorite is right here at HubSpot. HubSpot is getting a little bit big. They've passed the $10 billion market cap range, so they're now officially a large cap, right, at $27 billion. One thing that's nice about HubSpot is, they are under $1 billion in sales, right? So 883, super duper high gross profits at 88.56%. Basically the highest on the list of all the basket of stocks that I follow. If I do see anyone, any of them that are going to be higher than that, I will certainly do a video on that. Got these. So the gross profits of 782 million. And then we've got the previous year period of total revenue at 675. So we've got a 30.8% year-over-year revenue growth rate. Pretty good. Kind of in general, like to see a little bit higher than that. But again, HubSpot is my second favorite on the list here. After HubSpot, we've got Enphase, which is right here. And again, Enphase, in case you don't remember, they are manufacturers of a lot of equipment for the solar industry, like semiconductors and such. So what do we have with Enphase? We've got basically a market cap of 25 billion. Same thing. Revenue under $1 billion, so 774. Very similar financials to HubSpot. One thing I've noticed is in the solar industry, these companies tend to not have very high gross profits because the solar equipment is very expensive, obviously, which is why they don't really have high gross profits. I will say that Enphase is probably one of the highest gross profits that I've seen across the board, and looking at all the different solar companies that I've taken a look at about 44.7%. We've got a 24% year-over-year, full year-over-year revenue growth rate. Kind of not terrible, not bad, not stellar, right? Just kind of pretty average. But I have seen these solar companies, some of them aren't really growing as fast as other technology. And price pretty rich, right? At 73, when you take a look at their gross profit figure of 346 and divide it into their pretty large market cap of 25 billion, you're looking at a multiple of 73. Just to give you a little bit of context, something like Snapchat is above them about an 80. Snapchat's come up a lot. It's I took a position in Snapchat in the fall in the fall of 2020, and it's done super well for me. So that is Enphase, everybody. The next one is, these two are going to be a little bit outside of my zone of just comfort and love. But the next one is Neo. Pretty high. I didn't realize how big they were at 80 billion. But you take a look, they've got some pretty high revenues. Their full year revenues are, at about 22,868,000. So, they're pretty much right behind McDonald's in terms of their revenues, which is pretty intense. And then obviously they're going to have some low gross profits because it's really expensive to be a car maker. So 15.7% gross profit, margin is their figure, and then a 40.67% year-over-year, full year-over-year revenue growth rate, which is pretty strong, and then fairly reasonable valuation of the gross profits. of 3.6 billion into their $80 billion market cap at 22. So much lower than, certainly much lower than Enphase, and then also even lower than Hubspot. And then the last one is their numbers are super wonky, but I got to put them in here because it's Churchill Capital, which is really the shell company. I don't want to say it's a SPAC if it's not a SPAC, but it's, it is what it is. It's inside of that is Lucid Motors, and they're going to be a competitor to well, they are a competitor to Tesla. Cars are super, super beautiful, extremely beautiful cars, Lucid Motors, and they are, basically just positioned as being a formidable competitor to Tesla. And, they really don't have any numbers, basically. They're just not really reporting any numbers yet. So that's why I say wonky. It's like, I don't really like wonky numbers, so I'm probably not going to take a position in Churchill Capital yet. They are in my basket of 50 turbo growth companies, and I will be watching them. And once I kind of see a little bit more in their numbers, I'm going to, probably take a position in there because their cars are so beautiful. But it's really just 7, like what is 7? 7 is basically their market cap. So they're about a $7 billion market cap right now. I should have said 7000, but yeah, they're a $7 billion market cap. They've got no revenues. All they have is expenses, about 300 million of expenses. And that's really it. So that is Churchill Capital. So there you go, everybody. So those are the newest. Those are the newest 5 stocks, turbo growth stocks that I've added to the mix, to my mix on my way getting to 50. I've got a couple more stocks that I'm going to show you that I'm watching, that I actually haven't talked about yet. And I'm gonna, and again, I got my basket of 50 turbo growth stocks. And if you want more information on that, just go ahead and ask me in the comments section, and I can provide that. I can provide, kind of got some of these on tip rank, so you can at least see what they are. I don't really have all the different shares yet. But everybody, hey, thank you very much for watching. If you liked the value of this, if you like hearing about new stocks, if you want to see this basket of turbo growth stocks, go ahead and give me a like, subscribe to the channel. It's 100% free to give me a like. It's 100% free to subscribe to the channel, and 100% free to put a comment in any of the videos and ask a question for me. If you want to see more videos about turbo growth companies, turbo growth stocks, let me know. Put that in the comments section, and I'll do that. I always have to come up with, ideas, content ideas for the channel. Everybody, I'm also going to put some links below. I do have a blueprint I came out with recently where I cover, investing. I cover generating income online. I cover a lot in credit in this blueprint. I'm also going to come out with a new blueprint that actually covers a lot more with respect to investing and accessing credit through margin investing and other things, with investing. And a little bit about me. I've got a pretty big background in investing. My first job at was Merrill Lynch. I also did investment banking, and I worked at Sun America here in Los Angeles for 3 years. I'm not a financial advisor, and I'm certainly not your financial advisor. This is all for education, and it's for entertainment purposes. But outside of that, I'm also a good investor. I've got a 80x return on my Netflix shares, a 33x return on my Apple shares purchased in June of 2007 before the first iPhone came out, and then also at 10x return on my Amazon shares purchased that one day in 2014 where their shares were down $100 in one day. Also got a whole lot more singles, doubles, triples. I know a lot of people have been doing pretty well in the stock market, but I've got a lot of singles, doubles, and triples out there, and then also 4Xs that I can share with you as well. So I'm going to put the links below in there. If you guys like that, give me a like. Otherwise, have a great week. Thank you.